Thank you for attending the virtual roadshow, and I'm talking to Tom Stewart from Lulalend. Tom, I believe in the finance industry there's a saying that throwing money at every small business owner with a great idea is the best way to make a small fortune from a large fortune.
Yeah, look, business, a key part of understanding whether a business should take funding and what type of funding is the business being honest with itself around what can I realistically afford, and take into account potential drops, fluctuations in sales, revenue, etc. So we talk a lot about responsible lending and the onus on lenders, and that's absolutely right. But business owners themselves also need to be responsible and be cautious on what they can afford. What we always say to our customers at Lulalend is the most important questions you should ask yourself and answer when considering applying for funding are: why do you specifically need the funds, and what impact are they going to have on your business? So that will ensure you've got a clear plan for how you want to use that funding and the return on investment it's going to give you. So think of funding as an investment. Simply applying for a loan because your business is struggling is not the right thing to do. It will often lead you to take on debt that you can't afford.
Yeah, ain't that the truth? But the fact remains that lack of finance is a big problem for SMMEs.
Access to sufficient capital or liquidity is vital for both the survival and growth of any business, but particularly for SMEs who don't typically have large cash reserves or balances on hand. And this is especially true during uncertain times, as those we're currently in, as well as for seasonal businesses where revenue can fluctuate. In fact, a recent TransUnion survey amongst small businesses in South Africa indicated that over 50% of SMEs cite access to sufficient finance as their number one barrier to growth. And what having access to sufficient working capital or finance allows a business to do is a number of things. Firstly, it allows it to cover its fixed operational expenses, such as rent or salaries, even when sales or revenues drop. It can also help it cover those unexpected short-term expenses, such as equipment breakdowns or tax bills. And then on the positive side, it allows a business to really invest in and take advantage of growth opportunities, purchasing new equipment, hiring additional staff, running marketing campaigns, etc. And that can be particularly important for businesses where they need to pay up front for materials or stock before they in turn get paid by the customer. So as you can see, it's a common myth that only struggling businesses take on debt and look for additional funding. In fact, most successful businesses use access to funding as a strategic advantage to drive their growth. But unfortunately, in South Africa, it's often difficult for SMEs to get access to this funding. And that's primarily because the traditional lenders, such as the banks, they require huge amounts of paperwork and have really slow turnaround times. They don't really understand how to assess the business health of SMEs, so that leads to lower approval rates. And then even when they do approve, they often require excessive collateral, which many SMEs just don't have.
Exactly, and that's the age-old problem. Now, Tom, lots of money doesn't always solve all of the problems for an SMME, does it?
Taking on too much debt, it's critical to avoid that and avoid those costs. If you're paying too much of your business's cash reserves into paying off debt as well, it means you can't be investing in other more positive things that drive growth and development of the business, marketing, training of staff, new equipment, etc. It's absolutely essential that both the business owner and the lender do their due diligence and make sure that the debt is realistic in terms of the business's income and cash flow, and that it's also very clear what the costs of that debt are. So understand the costs clearly. What are you going to be paying each month for how long, and what the total cost of that debt is.
Yes, so important for business owners to keep that top of mind.
Yeah, I think there's a number of ways businesses can grow and improve their financial health. One is obviously to grow sales and make sure sales are profitable. I think that's something particularly entrepreneurs and small business owners overlook is, just because he's selling something doesn't mean it's profitable. So make sure the price is set accordingly, your costs are in line, and there's a significant or substantial margin on that allows any sales to be profitable. But it's not always easy to grow sales. If only it was that easy. Another way a business can improve its financial health and growth is obviously by reducing costs. So perhaps introducing technology automation where you can, but just making sure you're efficient and you've got a finger on the pulse of your costs and you're keeping them as low as possible. And then the third way is to bring in extra capital through funding to drive that growth. As I said earlier, to take advantage of those growth opportunities, to invest in them when they come along, or to make those short-term unexpected repairs or whatever they may be that are critical to the ongoing running of your business. And really, the successful businesses use a combination of all three of those tactics. They're continually looking, obviously, to find ways to drive sales, and their margins are right, so sales are profitable. They're controlling their costs, reducing them where they can, and then when it's appropriate and there's a clear opportunity with a clear return on it, they're bringing in additional funding to accelerate that growth.
That's what we need in South Africa. Now, for our SMMEs, where do they go to look for their finance, presuming that they skip back alleys and begging from family and friends?
Yeah, in South Africa, there's generally speaking, there's four sources of small business funding available. You have the banks, the traditional lenders who will offer probably the broadest range of financial services. Sometimes they offer the cheapest cost of borrowing, although you do have to watch out for the hidden fees, the monthly admin and initiation fees, etc., that can inflate those costs. The banks will have typically the most stringent requirements for SMEs and lengthy paperwork, heavy processes, as I mentioned earlier, and lower approval rates. After the banks, there's several government institutions that can help as well. So the likes of the Small Enterprise Development Agency, or SEDA, Small Enterprise Finance Association, or SEFA as it's known. And they'll offer a mix of loans and grants. But being the government, they're typically, again, very slow. And they may require other requirements from an SME, and BE requirements, etc. A third option is a business owner can look to bring on additional investors or partners. And again, that's not always a quick process. So if you're needing quick access to funding, then that's probably not the right option. And it does mean, by bringing in those extra funds, you're in exchange for that, you're giving away some control or share of your future profits as well.
That's really great to know that there is hope out there for SMMEs.
And then a fourth and increasingly popular option is alternative, increasingly technology-led lenders such as ourselves, Lulalend. And businesses are turning to these alternative lenders when they need fast turnaround. So the technology-led approach to the application process and decision-making approach, combined with far less paperwork required, means they're able to make decisions and get outcomes to business owners within hours rather than weeks or months. Businesses are also turning to lenders such as ourselves when they're just not getting approved by the banks. So because scoring technology amongst the alternative lenders is specifically designed to assess the business health of an SME, we're able to approve more. And then when the costs of borrowing from the likes of the banks or the government are not clear, that's another example of when businesses are increasingly looking to alternative lenders. Such as ourselves at Lulalend, most alternative lenders offer transparent fixed monthly costs that won't change. There's very few, if any, extra costs added on to that. So it's much easier to understand the total cost of borrowing. So they're, broadly speaking, the four main sources of funding for SMEs in South Africa.
The next big problem: I need money, I know who I'm going to ask, but will I get it?
I think the difference between ourselves and the banks, and that's where most of the comparison is made and why we have high approval rates is because we're able to more accurately assess SME business health. I wouldn't say we take on higher risk. We don't view the loans or cash advances we issue as high risk, where we make those in circumstances where banks wouldn't have. I think it's because we understand the business better. So we've got pretty advanced, bespoke, and proprietary developed technology that looks at a number of inputs to an applicant, and we believe is able to accurately understand the business health of that particular SME. And what we look at typically is a combination of the business's recent transactional history. Obviously, like most lenders, will take into account personal director and business credit scores. We look at the operating history, i.e. the time of trading and annual revenue of the business. And all of that combined with a number of other factors gives us a pretty accurate view of can we lend to that business. And I guess what we feel we understand better than the banks is the cash flow situation. So if a business has got a strong and healthy cash flow, it typically allows us to lend to them, whereas other lenders like the banks are looking more at long-term P&L or what collateral can they offer, etc., which in many cases SMEs don't have, and is actually relevant to the performance of their business and the ability to pay back a loan as well. We have very low default rates or bad debt rates, which tells us we're getting something right. We're lending to businesses that the banks would have typically avoided, and only in very few cases do those loans tend to go bad and are unable to be repaid. So yeah, we feel we're on the right track for sure, and that our technology and I guess unique approach to assessing these businesses is working. It's working for us and it's working for the businesses as well. Over 85% of our customers come back for a second loan or second or third loan. And that's when we're obviously able to lend more to them because we've got a history with them and we understand their business even better. So it's definitely working on both sides.
Thank you, Tom. Now, for getting finance, what are some of the keys you have seen that business owners need to have in their pocket to ensure their financial health?
In terms of qualifying for funding, all lenders will have their own criteria, and one thing I would suggest is if you're applying for funding, make sure you understand the requirements and the information required for the lenders that you're applying for. One of the most common reasons for getting declined is you didn't provide the right information or you misinterpreted the requirements. So save yourself some time there and make sure you understand that. Qualifying, as I suggested, credit score is critical. So make sure you're making your repayments on any existing debt on time and you're not taking on too much short-term, high-risk debt. That'll help you maintain a good credit score. Operating time, trading history, and revenue is something, again, all lenders will look at. Lulalend, we have a far less stringent criteria, require less trading history and lower turnover than traditional lenders. And then typically lenders will also require some form of collateral. And that's a major obstacle for many SMEs. As I said, they don't have those physical assets often, but they do have good cash flow. And that's why at Lulalend, we don't require collateral, which makes us often a much more viable option compared to banks. So if you meet those criteria of ours, and in terms of trading history and revenue, it's 12 months trading history and $500,000 turnover per year, then I very much encourage you to apply with us. You can apply with Lulalend in minutes, online, literally in minutes. We don't require any paperwork, and the only information we will ask you is basic personal, business, and 3 months financial history. The fact that it's all online doesn't mean any trips into branches as well, which nobody enjoys doing. The other key aspect of our funding that appeals to so many SMEs is the transparent and easy to understand costs. So rather than an interest rate, we charge a fixed monthly cost, and there's nothing on top of that, no hidden fees, no admin fees, and if you want to pay back the loan early to save costs, there's no early repayment penalties. And that's developed specifically to address a common pain point for business owners, which was I signed up with the bank and I thought it was going to cost X, but add all of these other things on and suddenly it's a very different picture. I've touched on the fact that we don't require any collateral, which is a huge benefit. What that fast online application process and very quick decision-making capability because of the technology we have allows us to do is, if you were to apply for funding today, we could have that funding in your bank account tomorrow. So we can turn around an application and provide you with funding within 24 hours. And we offer up to 2 million rand of funding over a maximum period of 12 months. In terms of the funding options we have, we offer fixed term funding solutions, so come and take a loan for 12 months, 6 months, whatever the period is. But an increasingly popular option is a credit facility, and what this is a pre-approved line of business credit. So as a business, you can withdraw down up to your approved amount whenever you need to. No need to reapply. It's literally log in, a couple of clicks, the money is in your account. So that offers business owners a real peace of mind, knowing that I've got instant access to funding when I need it. So it's perfect for businesses that kind of regularly need to tap into additional funding, or when they do, they need it quickly. And it's a really popular product, and something our customers who are on that credit facility use a lot, and really tell us it helps them run their business and just give them that peace of mind, remove the stress of worrying about funding. Yeah, they do very much, because it basically puts the cost of the borrowing in their hands. You'll take out funding for 12 months. You've got a very clear plan of how much you need to pay and how much it's going to cost you for a 12-month period. But then if your business improves, or you come across some extra cash reserves and you think, I just want to pay this off now, you can, and you can minimize the cost. So yeah, it's just they love the control and the flexibility it offers. I mean, it very much depends on the type of accounts or debt that you're struggling to meet the repayments or defaulting on, and less minor accounts, retail accounts, etc. There's generally more flexibility amongst lenders there. If you're struggling to make repayments for home loans, car loans, business property loans, that's a more serious issue and will hurt your credit score more. Ultimately, we take the credit score from the credit bureau, or the credit bureaus, like all lenders, and how long it takes those things to clear and come off your record is in the hands of the credit bureaus there, and it will vary, as I said, depending on the credit bureau and also the type of loan or debt that you were struggling to repay. So it's hard to sort of put a finger on it and then give you a precise answer, but I guess the key message there is on make sure you're keeping those repayments made, and if you are running into trouble, enter a dialogue with the lender that you're struggling to repay, and lenders will generally try and be flexible and work with you. The worst thing you can do is not communicate, ignore it, and sort of hope it goes away. It won't. So address it up front and try and come to an agreement, especially in the current environment. Lenders are trying to be flexible around payment holidays, etc. We do ask businesses what they intend to use the funding for. It's really there as a guide, as part of our decision-making process, but it's not central to it. We're really looking, as I said, at a business, trying to understand the business's cash flow situation. And that will determine their affordability, how much they can lend, borrow, and ability to pay it back. We don't offer secured lending. We don't require collateral, and we won't take collateral. So, and as I said, is because we're trying to address that gap in the market, that pain point that exists around SMEs typically don't want to provide collateral. So we won't take security or collateral into consideration. We'll make our decision purely on cash flow and affordability levels in the business. We're very happy with where our bad debt or default rates are, much lower than many other lenders. And I think that does, as you say, give us heart that our assessment models and technology are working and give us the potential to really scale the business and help more SMEs going forward.
Well, that's fantastic. Well, let's hope that the funds get in deserving hands as quickly as possible. Speaking of getting money into the hands of SMME owners, you have a special COVID offer for SMMEs.
Yeah, so if all of the information on Lulalend and what we can offer that I've shared isn't enough of an incentive to go and find out more about us, then because we understand that access to capital and finance is so important for SMEs right now at this stage of the rebound and the recovery from the pandemic, we're offering all first-time customers who take funding with us the ability to delay their repayments by 60 days. So during that time, no charges will accrue. So it's effectively 60 days or 2 months of completely free capital. Visit lulalend.coza and enter promo code LULA, that's LULA, to apply, and 2 months cost-free capital can be yours.
That's great. lulalend.co.za, code LULA, LULA. Fantastic. Now, especially for people who want to know more about Lulalend, can you finish off by sharing some background to the company?
Absolutely. I mean, the core founding principle of Lulalend, and as you touched on it, the two co-founders, Trevor Godling and Neil Wellman, are both entrepreneurs themselves, so they've been through and felt the pain firsthand of trying to access funding. And the core founding principle was around empowering South African SMEs to really grow and prosper and contribute fully to the economic development of the country by giving them real-time access to working capital, the funding they need access to really deliver on their potential. And that conveys through into all that we try and do with our customers. As I mentioned, it's not just a one-time loan. The vast majority of our customers come back, and over time we're looking to develop more and more products to help them manage their cash flow better as well, and give them even more ability to manage the cash flow quickly, easily, efficiently, and focus on what they are good at doing and what they love doing. Everybody who works for Lulalend buys into the mission that we're on the side of SMEs and want to level that playing field in terms of access to finance, and it's kind of helping the smaller guys succeed against the odds to some extent. But a few things that really stand out in my mind are obviously last year in particular, and lockdown was a really tough time for SMEs everywhere, and we saw a lot of our customers going through a lot of challenges and coming to us saying, I've been unable to trade for the last 3 or 4 months. How can you help me? I haven't had turnover, I haven't had sales, I'm struggling to meet repayments. And there's a number of examples of where we were able to show flexibility and restructure those loans or delay the payments, and really work with the business to come to a solution that in the end really worked out well for the business. They came through lockdown, and they got back up on their feet. They started trading again, and they're now thriving businesses, or really recovering businesses. And in a number of cases, they've fed back to us and said the flexibility you showed and the willingness to delay payments meant that I could, either survive or arguably more importantly, it allowed some businesses to say, look, I could keep on staff. I didn't have to get rid of 20 people because you guys were delaying the payments and weren't insisting on servicing that loan. So yeah, that I think they're the cases that really stand out to me as where we've made a real difference and helped an SME.
brilliant information and a dynamic company. Thank you, Tom. That was Tom Stewart from Lulalend.